Good afternoon and welcome to the Biotech Growth Trust PLC investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Josh Collum, partner at OrbiMed. Good afternoon to you, sir.
Thank you, Alessandro, and thanks everyone for joining me this afternoon. I'm excited to introduce you to the Biotech Growth Trust. So again, thank you for taking the time to listen to my presentation this morning. So by way of background, I am a partner at OrbiMed on the public equity team. I've been with the firm since 2021, so a little over 3 years now. And have been an investor in the space of biotechnology since 2004. Was named a co-portfolio manager of the trust last year. My partner, Jeff Shu, is a general partner at OrbiMed. He's been at the firm since 2002, following exclusively the biotech sector, and he has been a portfolio manager of the Biotech Growth Trust since May 2005. So both of us have 20 plus years experience covering the biotech sector. So background on OrbiMed. OrbiMed's a global healthcare dedicated investment firm with over 25 years of experience. We celebrated our 25th anniversary last year. We focus exclusively on healthcare as a firm. The firm has a little over 17 billion assets under management, as you can see in the pie chart on the left across various business units. The non-public equity business units are shaded in gray, and the portion of the vast majority of the public equity investments under management are within the Biotech Growth Trust and its sister trust, the Worldwide Healthcare Trust. The firm has over 140 employees globally. We've been hiring last year and year to date. And we have over 30 colleagues with MD and PhD degrees. Their scientific expertise helps with technical assessments of a lot of biotechnology investments. So here's a little bit on performance for the last fiscal year. So we're on a March 31st fiscal year. So from March 2023 to March 31st, 2024 of the trust was up 26.5% on an NAV basis. This compares to the NASDAQ Biotech Index, our benchmark, which was up 5%. So it was a good year last year. Now, the trust has invested in small caps over large caps, and I'll articulate that a little bit on this slide and show some of the performance for the past fiscal year. Large caps are defined as companies with market caps over 10 billion, mid caps 2 to 10 billion, and small caps are companies under 2 billion in market cap. You can see in the chart on the bottom left side of the screen that the trust was underweight relative to the benchmark large cap stocks and was overweight small cap stocks coming into the fiscal year. Now the graph for the screen, the blue line represents large cap stocks within the NASDAQ Biotech Index, again, our benchmark. So we just graphed their performance over the course of the fiscal year. We did the same for mid caps in brown, gray, and we did the same in green. The small caps are in gray, and the mid caps are in green. Apologies. And you can see that the small and mid caps outperformed the large caps in the last fiscal year. Now, this was welcome and something we had expected and positioned for, although over the last 3.5 years, so since March 2021, small caps have underperformed large caps pretty significantly, small and mid caps. And you can see that in the graph of the chart that's shown on this slide. Now, the gray box shown here on the slide is the period for the last fiscal year. And you can see that there's been a convergence of the performance of the small caps relative to the large caps. Although after the fiscal year through September 30th or mid-year, the large caps actually did outperform the small caps. We exited the September 30th mid-year time period, again, overweight small caps and mid caps relative to our NBI benchmark and underweight large caps. And you can see that in the chart right on the upper right-hand corner of this screen. So this is a graph just depicting the fiscal year performance for the the performance for the half year ending September 30th. Our mid-year report will come out shortly, and I encourage you to read it when it's published. But on an NAV basis, the trust was up 2.7%, while the benchmark index was up 1.4%. So a couple of slides ago, I showed you that the performance for small caps in biotech greatly underperformed large caps. This is no different than the market as a whole. Here we graph in blue the Russell 1000, which is a common index comprising of large cap stocks across many industries. Versus the Russell 2000, again, a common index of small cap stocks across multiple industries. And you can see over the 3.5-year time period since March 2021, there's been a 40% underperformance. Now, a lot of the Russell 1000 has been driven by large cap technology companies that are fairly common, I suspect, to the listeners of this webinar today. NVIDIA, Netflix, Google, Amazon, etc. So the underperformance in small caps in biotech has led to an unprecedented low in valuations on what we believe to be an unobjective metric, which is the ratio of market cap to net cash on the balance sheet. And this is a graph of the median biotech stock, just depicting the performance on how it's traded from a market cap relative to net cash on the balance sheet. Now, during calendar 2022 and 2023, it hit all-time lows of trading at less than 2 times the cash on the balance sheet. We've since recovered a little bit, as you can see in the bottom right of the slide, but it's nowhere near historical norms, which is in the 3 to 4 times range. It's lower than the dot-com bust, which occurred early in my career. It's lower than the Great Financial Crisis, and it's lower than the 2015-2016 time period when presidential candidate Hillary Clinton tweeted about drug pricing. So here we go through some of the individual biotech stocks, again aggregated on a graph showing the percent of biotech companies, the percent of publicly listed biotech companies that are trading below net cash on their balance sheet. So this is the definition of a negative enterprise value. The market cap of the company is less than the cash on the balance sheet. And at its peak in 2021 and 2022, over 25% of the biotech universe was trading at this depressed level. Right now, we're in the mid-teens. So there has been a rebound, but you can see that it's well above the historical norm over the last almost 25 years. The graph on the right just it is the same metric, but instead of percent, it's an absolute number of companies. So the absolute number of companies trading below cash on the balance sheet or negative enterprise value exceeded 150 at its peak. We are just below 80 at the present time, but again, well above the historical norms. So why is this? Why is biotech underperformed for the last 3.5 years, and why are we at depressed levels today? And why can this change? So interest rates have a big part to do with biotech performance. The biotech companies are cash burning companies. A majority of them are pre-revenue companies and not profitable today. So they are dependent on the 10-year yield for evaluation perspective as we apply discount rates to these companies in order to value them. So the graph on the top hand part of the slide, you can see the blue line or the black line, and you can see that the 10-year yield increased pretty rapidly from 2022, excuse me, through 2023 and even in early 2024. Now, this was a result, as you can see on the bottom part of the slide, of the Federal Reserve taking rapid increases in interest rates over that time period. There were multiple interest rate increases. The Federal Reserve had to do that to lower inflation, which had spiked, as you can see in the teal line at the top hand part of the slide, and they have generally achieved that. Both the 10-year interest rate as well as inflation has stabilized in the recent time period. We believe that we will see future interest rate cuts by the Federal Reserve and a potential declining, but at least a stabilization of the 10-year yield, making it more conducive for biotech investing during the remainder of 2024 and through 2025. The Federal Reserve, as you can see on the bottom part, did do a 50 basis point cut in September. And earlier this month, which is not on this slide, in November, there was a 25 basis point cut. So again, we look forward to future cuts as a potential tailwind for biotech investing. So this is the performance of the trust since its inception in May 2005 relative to the NBI and the FTSE. As you can see, in 2021 and 2022, we did suffer a drawdown. And I hope I articulated why that was the case. It had to do with positioning in small caps over large caps, which in retrospect was not the right positioning. However, we do believe that the market is set up for a rebound in small cap biotech, and we are positioned accordingly. We have had some outperformance recently, as you can see, and I showed you in the last fiscal year and the first 6 months of this fiscal year, and we're going to continue to work hard towards that for the investors in the trust. So that was a bit on macro on biotech. What's really exciting is investment themes, and the reason I get excited about investing in biotechnology, and I believe the investors in the trust do as well, is scientific advancements and creation of new medicines to treat patients. So on the next slide, I'll go through some key breakthroughs that have occurred in biotech over the last 18 months. We have them listed here. I'll highlight a few of them for you. The first is the third from the top. Brensocatib is an experimental drug. It's an oral DPP-1 inhibitor. It is being developed by Insmed. Insmed released data showing a positive benefit over placebo in bronchiectasis. This was a pivotal study for registration intent to phase 3 study. They showed a reduction in exacerbations, which require hospitalizations. And this was the first ever study that was successful for the treatment of bronchiectasis. It is a very important need for those patients suffering from this chronic lung disease. Another one I'd like to highlight is Casgevy, which is the second from the bottom. It is the first ever CRISPR gene therapy approved in the world The first approval and first launch actually occurred in the UK ahead of other markets, but it's now available in many countries around the world. This is a potential one-time treatment that is a cure for sickle cell disease and beta thalassemia. Certainly relieves a lot of their symptoms in the patients that get it, the severe patients that have this disease. It was developed and is commercialized by CRISPR Therapeutics and Vertex. So it's great to have developments in scientific developments in biotech, but bringing drugs to market is what is really important. And here are some significant approvals by the U.S. Food and Drug Administration, the largest financial dollar market in the pharmaceutical world. And all these approvals took place in 2024. Now, I want to highlight the last column on the slide. All of the boxes in that column have the word first bolded as the first word. And that is because every one of these drugs was a first approval within a certain technology, utilizing a certain technology to develop the drug, a first approval of a drug of its kind, or a first approval to treat a certain disease. I'll highlight the third from the top here, Rytelo by Geron Corporation. It's the first and only oligonucleotide telomerase inhibitor that is approved. It was approved to treat low and intermediate risk myelodysplastic syndrome and was launched right in the middle of this calendar year in late June to treat this precancerous disease for patients. Now, the next slide is one or two slides that I'm going to run through two disease areas for you so you can hear a little bit more about what is being developed in the biotech universe and some of the themes and investment analysis that the trust is doing to look for new products that companies are developing and ultimate investments in those companies. This is oncology. It's the biggest cancer is the biggest therapeutic area that biotechnology companies are developing. Clearly, there's an unmet medical need for cure for cancers. A lot of companies fall short of cure and are really looking to extend the lives of cancer patients. And we think that's a very good goal and look to invest in companies that can have successful products to do that. Now, we list 6 novel technologies here that cancer companies are using to develop new drugs. So traditional chemotherapy and radiation and surgery were long mainstays, as well as traditional antibody therapy, which was developed in the 1980s. These are the new tools in the toolbox for biotech companies that are developing new drugs. Cellular therapies, antibody drug conjugates, bispecific antibodies, targeted therapies, and radiopharmaceuticals have all been tools where recent drug approvals over the last few years have been successful and are on the market for patients. Now, cancer vaccines, there has not been a therapeutic cancer vaccine approved to date. However, there has been successful trials, and we're optimistic that we can see a cancer vaccine make it to market over the next few years. We're hopeful, but we'll have to see. But we look at the tried and true categories here: bispecific antibodies and targeted therapies, as well as antibody drug conjugates, as key investment areas for us for the trust. We've listed also within each of the boxes some of the companies, the public companies, as well as private companies that are working on treatments, again, to extend cancer patients' lives. Next category I'd like to discuss is obesity. I can't turn on the television without seeing an advertisement or a news segment on the new obesity medicines, Mounjaro and Ozempic, which are marketed in this $200 billion plus category by Eli Lilly and Novo Nordisk, two large pharmaceutical companies. These drugs provide 12 to 18% weight loss over the course of the year when taken. And the next generation drugs that these companies are developing have shown in clinical testing up to 25% and even a little bit above weight loss in these categories. Now, if you look at the box on the bottom left of the slide, these therapies, weight loss therapies, have not just provided cosmetic benefit to patients, but they've also shown cardiovascular outcomes, reducing cardiovascular events like stroke and heart attacks in patients. They've shown a benefit in sleep apnea patients, and they've also shown a benefit in chronic kidney disease as well as fatty liver disease. So there are medical benefits beyond the cosmetic benefit of just losing weight. However, if you look in the box in the bottom middle, there are room for improvements over these GLP-1 therapies. These drugs are delivered once a week through a shot, a subcutaneous administration. We think that a more attractive route of administration, like an oral pill or a less frequent injection, could be desirable. And we look at innovations and companies that are working on therapies like that. We look at novel mechanisms of action, so different targets other than GLP-1, which could be attractive, that could address shortcomings of GLP-1s to be used in combination with GLP-1s. So we look at drugs that may have less side effects, limiting or reducing, hopefully eliminating the nausea and vomiting that is associated with taking these drugs. And we also look at drugs that can improve the quality of weight loss in patients that take these therapies. Right now, about 40% of the weight that is lost when taking a GLP-1 is lost through lean muscle mass. 60% is fat reduction, but patients that take GLP-1s also lose lean muscle mass. So we're looking at companies that address that shortfall in the therapy and potentially can maintain some or all of the lean muscle mass while still having the fat lost. So that would be a nice combination therapy, and is some of the strategies of the biotech companies that are listed in the box in the bottom right-hand side of the slide. So here we've listed companies that are working in the weight loss area that are all biotech companies, and the trust does own some of the companies that are listed here. So in summary, on this slide, Lilly and Novo do have head starts in this market and certainly are the market leaders, but we believe that the category is so vast that there is room for other players that could come in with follow-on therapies that are either combined with the current GLP-1s or offer advantages relative to those therapies. So the trust also offers different technologies to treat diseases. Here we've just tried to articulate some of those new technologies, some of the tools in the toolboxes that biotech companies are using to develop new drugs for various diseases. Antibody drug conjugates, gene therapy and gene editing, cellular therapy, bispecifics and T-cell engagers, and oligonucleotide therapeutics all have representation within the trust. We've listed the exposure on an NAV basis as of September 30th in the top row of bubbles to each of those approaches and technologies, and we've also listed below companies that are in the trust that as of September 30th that deploy some of those technologies. So I talked about new technologies. I'd like to talk about the FDA and approving drugs. Drugs have to make it to market to create revenues. The FDA has consistently, since 2017, approved 50 or so drugs new drugs a year. 2022 was a bit of an anomaly just because of a slowdown during COVID and development, but 2023 was actually a record year in recent times for drug approvals, with 67 new therapies approved. Financing. So biotech financing, this is a busy graph and chart here. I'll walk you through it a little bit. The blue bars represent the total volume of IPOs raised over on a quarterly basis since 2015. You can see during 2021, or rather 2022 and 2023, there was a slowdown in the number of IPOs as listed by the blue line. There has been a rebound in 2024, a small rebound, early signs of a rebound, and we do expect the IPO market to rebound a little bit more in 2025. Now, juxtapose that versus the follow-on offering market, which, although not as high as it was in its peaks in 2020, has been rather steady during 2022, 2023, and 2024. The number of follow-on offerings is listed by the green line, and the dollar amounts listed in aggregate on a quarterly basis, or the green bars listed in this graph. Now, biotech follow-on offerings remain strong because companies that have good products can be financed. Weaker companies did face challenges throughout the years, but the companies that had good assets were able to be financed, often at discounted valuations. And the trust has participated in confidential follow-on offerings and anticipates doing so in the future. And the trust did participate in a few select IPOs during 2024. So another backdrop to biotech investing is M&A activity. We've listed the public transactions again on a quarterly basis on the chart at the top. I know this is a rather busy slide, along with the total purchase or takeout price in aggregate for those transactions that were listed that occurred in each of these quarterly periods. Now, in the last couple of quarters, there's been a slowdown in M&A activity, 4 transactions in 2020, in Q2 24. This is on a calendar basis, and 3 in the last quarter, Q3. We believe that the pharmaceutical companies have paused a little bit ahead of the U.S. presidential election, which has now concluded in early November, in order to understand the policy from a FTC perspective by the new administration. Now, the quotes in the bottom left-hand box on this slide are just a few select quotes over the last few months from some pharmaceutical executives. They articulate the strategy of the pharmaceutical companies that they need to look for biotech innovation to fill their pipelines and supplement their future revenues. So you can read them at your leisure. The slide on the bottom right, the box on the bottom right, are transactions that have occurred over the last 2 calendar years where the trust owned the target company at the time of the acquisition announcement by the pharmaceutical company. So the logo of the target is listed above the pharmaceutical logo. And as an investor in the trust, these transactions tend to be at a nice premium, and you participate in the premium and the price appreciation when you are an owner of the trust. So why do pharmaceutical companies need to do M&A? It's nice. They always need to have new drugs. It's nice for them to sell new drugs, and they are really marketing organizations. Well, a lot of their current blockbuster products are coming to the end of their exclusivity period. Their patents are expiring. We estimate through the end of the decade that 270 million in branded sales among the larger cap pharmaceutical companies will be at risk. So they need to supplement their pipelines and make up for some of the revenues that they lose. And subsequently, they do look to M&A to do that amongst biotech companies. Now, the right-hand side of the slide lists some of the drugs that will lose exclusivity through the back part of this decade, as well as their 2023 sales in billions. So the top one, Merck's Keytruda, which is a breakthrough cancer drug, has been on the market a while now, loses exclusivity in 2028. This drug did 25 billion in US dollars in 2023 in revenue. So they have a big patent cliff to contend with, and it does make up a big part of that big bar that you see in 2028 on the left-hand side of the slide. So what is the trust strategy, and what is our outlook for the remainder of 2024 and into 2025? We are going to continue to invest in emerging biotech companies over large cap biotech companies in order to capture the rebound that we think started to take place last fiscal year. We will continue to look for compelling financing investments at low share prices in companies. We will keep our gearing generally between 5 and 10%. Again, we want to take advantage of the significant and unprecedented low valuations and capture upside for our investors in the trust. I hope I've showed you why biotechnology companies are trading or have traded at their low valuations through the metric of net cash on their balance sheet. And we think that the percentage of companies will be reduced as the sector rebounds. We think that interest rates will stop increasing and start to decline through 2025, and that will be a tailwind for biotech investing. And for those of you concerned about a potential recession, biotech has historically outperformed during recessions. So in summary, we believe that valuations in the sector contradict and are disconnected from the fundamental innovations that have taken place in the sector over the last few years. And we believe that there are future innovations that will lead to a rebound in the sector in the future. We also believe that large pharmaceutical companies will continue to look to biotech targets, especially if they stay at lower valuations, which will be a tailwind for the sector. Last point I'd love to drive home is OrbiMed believes this is an excellent time to invest in biotech innovation at unprecedented low valuations. And right now, I'm happy to take questions. I'll leave this slide up so you can read it as I go through them. So maybe I'll start with one question that was submitted earlier for the presentation. So the question, and I'll read them here. You mentioned that cash on the balance sheet, a valuation metric. Is this a good way to value cash burning companies? What is the best way to value these companies at early stage development? So we use cash on the balance sheet because it is an unobjective measurement, and we felt that that was a good way to describe the industry as a whole when aggregating all the companies. It's pretty hard to argue with a current stock price and the amount of cash they have per share. That being said, when we do our valuation models, we do discounted cash flow analysis of future cash flows for products that companies are developing, and we put a probability of success on the development of that product based on the stage of development as well as the data that they've been shown and our proprietary analysis of what the probability of success is. Excuse me. That is somewhat subjective because these are our assumptions, but we wanted to present an unsubjective or an objective measurement in these slides. But when we value companies on an individual basis, we do use subjective measures. And I forgot to apologize in advance before I get to the next question. I'm on the tail end of a cold, so my voice is a little scratchy. I went through a lot of innovations here in biotech, but I have not seen anything being developed, and I can tell you that there's nothing in future near-term development for curing the common cold, unfortunately. So the next question, in the large, mid, small, early slide, the weightings were not 100%. It seemed to be quite over. So our weightings were 100%. I think you were looking at the overweight or underweight, well, relative to the benchmark index. But I'm happy to follow up with you with regards to that. So we have a question. What steps do you take to mitigate the small cap volatility and risk versus the considerable upside investments at early stages? So I actually have a slide here on risk management in the appendix that I'll pull up for you to share. So, we try and diversify the portfolio by size and geographic area. Biotech is a very volatile sector. So we do look to keep certain position sizings, 5 to 10% for large caps, so not larger than 10% as a percent of the NAV of the portfolio, and we'll keep smaller cap companies in the 1 to 3% range. We also look to limit drawdowns into clinical catalysts and protect against risk. So we usually know when events are coming, and we will actively trade around positions. So we look to trim positions on highs, add on lows, and trade around positions also to manage risk ahead of events. Okay, maybe the next question. How might the ongoing focus of industry consolidation and transformative innovations drive long-term returns for the trust? Well, we look to invest in innovative therapies. One of our mottos is we want to look for drugs that are first in class and best in class. And those are the drugs that usually sell the most. A good medicine should be profitable for a company and can be profitable from a consolidation basis for a pharmaceutical company. Pharmaceutical companies are always looking for new drugs, and a successful biotech company in its development can be a target. So, while we can't count on M&A, we can count on pharma looking for companies, and we keep that in mind in picking our stock selection. And although we don't count on a company, that can't be our only thesis. We do talk about, is this an interesting target for a pharmaceutical company, and consider it as part of our investment process. I have a question on portfolio turnover. What catalysts drive this? And mainly led by takeover activity. So biotech stocks are fairly volatile, and we keep valuation metrics on as many stocks in the universe as we can. And certainly every company that's in the portfolio. When a company reaches a stock price that we think is overvalued, we look to sell it. If we think that a certain catalyst occurred that we were playing for, the stock goes up beyond what we thought the value was, we will book the gains for the company. Alternatively, if we were not involved in an event and we thought something positive happened and the company was now more de-risked and the market was not reflecting the value, we can buy more of that company. So we do actively trade the portfolio, and we do have higher turnover than traditional trusts, but it's a function of the sector, the volatility of the sector, as well as managing the portfolio risks around binary events that do occur. Drugs in clinical testing, it either works or it doesn't. So by definition, it's a binary event. So I have a question on the performance of the trust over the last few days. The biotech sector has been a little bit volatile with a surprise announcement of a new head of HHS. Robert Kennedy Jr. Was announced by the Trump administration as a potential appointee as the head of Health and Human Services. Now, Robert Kennedy has publicly come out and stated that he is anti-food additives and he is anti-vaccines. His appointment by the Senate will be under review. The U.S. Senate will be under review in January. We do not know if he will become the HHS secretary, but we do have to take into account his future policies and his impact on the healthcare sector as a whole, as well as his impact on drug pricing and future developments for the industry. He does not, as HHS secretary, if he becomes that, control the Food and Drug Administration or FDA approvals. And the FDA's mandate, public mandate, is to approve safe and effective drugs for patients in the United States. Nonetheless, there was a quick shock to the sector, and we think this has actually created interesting opportunities. We did reflect some of his policies and consider those as risks in the portfolio when we've traded it over the last few days. How likely is RFK Jr.'s appointment to be confirmed by Congress is a question. That is a tough question to answer, simply because senators, so it's not the Congress that approves it, it's actually the 100 senators in the U.S. Senate, and they're very fickle. The Republican majority in the Senate is not that large, and all it takes is a couple to swing the other way for him not to be appointed. There's going to be a lot of statements that he makes over the next few months that will influence some of the senators' views. And I'm not willing to put a percentage on it at the present time. However, we're operating under the assumption that he will ultimately be appointed by the Senate, but we'll have to see. Let me see. Are all holdings listed is a question. So there is a slide in the appendix here where we list all our holdings as of September 30th. And that'll be included in our mid-year report that will be filed shortly. So that's why we've included that here. But we don't list our current holdings in the trust as of today, November 20th. Is it true to say that large pharma trusts, worldwide healthcare, have outperformed biotech over the long run? I don't know the answer to that question. I can say that biotech has outperformed historically large cap pharma and large cap holdings over the course of my career. However, in the short term, especially with this interest rate volatility, that has not been the case. But historically, and I used to have a slide in the deck here showing the biotech performance versus the S&P 500, and it is one of the top sectors historically from a performance perspective. So that was the last question that I have here in the queue. So I hope you enjoyed my presentation. I hope I was helpful in answering questions. Once again, OrbiMed and myself and my partners are included or excited about the prospects for the remainder of 2024 and into 2025. We are going to emphasize our investments in emerging biotech over large cap biotech. We're going to continue to look for first in class, best in class, and fundamental innovation in the sector, which we believe will drive valuation outperformance. And we think that interest rate stabilization and ultimately interest rate cuts, along with the backdrop of large pharmaceutical M&A in the sector, will be tailwinds. So once again, we think this is a great time to invest in biotech innovation through the trust at unprecedented lows in biotech valuations. Thank you so much for your time, and I really appreciate you listening to me today, and I hope you all have a good day.
Perfect, Josh. Thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of the BioTech Growth Trust PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.